You know the point where the captain of the Titanic saw the iceberg and went, and then was desperately spinning the wheel thingy, but just couldn't turn the ship? Well, that's also the worst nightmare for the RBI. Just replace the word iceberg with inflation. Because like a ship, once the RBI turns one way, it can't suddenly stop and say, oops, I've got this wrong, let's change direction the next day. Because that would destabilize the economy. And so when the RBI starts raising interest rates to control inflation, it generally does so for months at a go, and then pauses only when it feels that inflation is under control. Then it stays there until it realizes that growth is starting to fall and it needs to cut rates to rescue it. So what the RBI doesn't want is to say, hey, inflation is no longer a problem, I'm cutting interest rates, and then the inflation iceberg turns out to be much larger than expected. So every 2 months, the RBI decides what to do with interest rates, right? And the last meeting was in June, and markets described this as a hawkish pause. Now, if you're wondering, who is this hawk? Why did it pause? Allow me. So here's the deal. The RBI raised interest rates from 4% last year to 6.5% now to control inflation, which fell from 7% to 5.1% expected by the RBI this year. Now, the RBI's inflation target is 4%, but it can officially tolerate it up to 6%. Now, after hiking every meeting since last year, it paused for the first time in April, saying that, hey, maybe we should stop for a bit and catch our breath. And then 2 months later, in the June meeting, the RBI still went, wait, still catching my breath. And so markets went, hey RBI, have we reached the end of this hiking trek now? Is inflation finally under control? And if so, are you now going to come down soon? Because that's how markets work. They essentially make money on predicting where things are headed next. But the RBI instead said that, hey, I know I've paused twice, but I don't know, I might still be in the mood to hike. In fact, Governor Das was so insistent in the policy meeting that rates aren't coming off till inflation comes closer to 4% levels that most people who were expecting rate cuts later in the year were like, wait a minute. If the RBI is forecasting inflation at over 5% this year and then saying that until it becomes 4%, I'm going to keep rates elevated, then interest rate cuts, would it really happen this year? And this adjustment in expectations makes interest rates harden. But here's the interesting point. The RBI is talking so aggressively on inflation at a time when it seems quite confident that growth will be strong at 6.5% this year. That is, it feels that there is no need for it to cut interest rates to help growth. Mind you, not everyone is so optimistic about growth. In fact, the IMF has India's growth at 5.9% this year, with this being a really tough year for the global economy. So the key question is this. Will the RBI still stay on the top of the hike trek if growth starts to fall below its forecast of 6.5%? To know more, subscribe to The Bond Economist.